Hi everyone. I have here John. I'm not I'm not even gonna try to pronounce his last name, so I let him pronounce his last name for you.
Yeah,
So John, why don't you introduce yourself and then yeah, tell us more what you do and yeah, just introduce yourself.
of course. So, hi everybody. I'm Jon Vlachogiannis. You can call me John V. It's my Starbucks name. It makes it much easier for everybody to just call me John V. And an entrepreneur, startup. I'm a cool guy. So yeah, here with Christine. Thank you a lot for having me in your live stream. We're gonna talk about some pretty cool stuff.
Yeah, cool, cool. So yeah, John, so I know you you're a wealth manager and stuff. I know you built some startups and all of that. So I just want to say hi to the people who log on. Mariana is from Santa Clara. Hi, Mariana. Okay, I hope I pronounced that name correctly. And Kelsey, hi. So yeah, why don't you tell me more about so you started startups and stuff. So what kind of startup have you started? And then what's your experience around that? Because then
Mhm.
I don't know if you consider my company a startup or like what would you define a startup? Like does it have to be, like what like $1 million or something? So yeah, tell us more
No,
about
no,
that.
definitely no.
Uh-huh.
So this is my fourth startup, and my previous company got acquired by a big public company in San Francisco, a tech company, Splunk for the tech guys in San Francisco that they are into big data and machine learning. And I've been doing small startups and bigger startups in the United States for the last I don't know, maybe 12, 13 years. It's super interesting. I love the startup space a lot. My first company got funding from Facebook in 2008. Facebook was running a fund called the Facebook Fund, and we were part of this fund with other big companies. And I loved the idea that you can build something and provide value and then get funding and get more customers and make everybody happy or sad if the company doesn't make it. But I really like it much more. I prefer working like that instead of being stuck in an office and having
Mhm,
somebody tell me what to do.
mhm,
So yeah, after my last company got acquired, I decided that I have to do something that has more impact for more people, and I decided to start to become a financial advisor, a wealth manager, and I became regulated wealth manager. I had to pass the exams, all these non-interesting stuff at all, and yeah, and here we are. Here we are today.
okay. So you say you're a wealth manager. So is this your main business right now or do you have different businesses going on right now?
This is my main business. It's my main
Okay.
startup. And it's very
Okay.
strange that a financial advisor is a startup, but in our case, we are a startup more than a financial advisor. We have raised funding, everything is fully electronic. We use
Mhm.
algorithms. Most of our clients are entrepreneurs, creators, and people that have their own businesses. So we try to hang out with people that they love providing value.
So tell me more about so what are the services you offer? Like are you the typical financial advisor, planner? Like how are you different and how are you the same as the financial planner? And then are you also working towards your CFP, certified financial planner, or like are you more focused on investments and managing investments? So yeah. What's your
What
focus?
I'm focused 100% on managing investments. I
Mhm.
believe that people, if they play their cards right, they could retire much earlier. And
Mhm.
the thing that is very interesting is that it's not rocket science. Like when I entered that space, it's not rocket science. Building a portfolio that performs well under all conditions, it's not something that you need to have a PhD in, I don't know, mathematics, or you have to be a graduate of Stanford or MIT. It's pretty
Mhm.
simple stuff, but you need somebody next to you to tell you what you have to do. It's like a
Mhm.
personal trainer, right? Everybody knows that in order to get fit, eat less, exercise more. But it doesn't
Mhm.
work like that. We know the basics, but it's very difficult to apply them in an everyday life.
Mhm.
So to answer your question, what we do as agent risk, first of all, we use algorithms specifically for to create portfolios specifically for our people, for entrepreneurs, creators, small business owners. And then whenever we have a new customer, we include them to our network, what we call the agent risk network, where
Mm-hmm.
you can meet angel investors, other entrepreneurs, other hustlers, and it's very interesting how this community started becoming pretty influential as we had a lot of customers getting funding from other customers, starting their own real estate group, moving to other ventures.
Mhm.
And to tell
So,
you that, sorry,
oh, uh,
yeah.
oh no, go ahead. So I guess like is your clients like individuals or entrepreneurs? Someone made a comment. George said sounds like some fintech. So I guess can you consider yourself a fintech? So how many employees do you have? Is it just run by you, or do you have a couple people working for you?
So we are 12 people. We
Oh,
are in
okay.
the wealth tech space, which is a
Hmm.
hipster term of saying fintech. It's pretty much the same, of course. Um, and yeah, it's the main difference of that we have at Agencies is we try to service entrepreneurs and individuals. We're not trying to service any companies, any financial institutions. We're trying to help people that are like us, like me and you.
Yeah. So someone just said this. So George Reyes said, "Sounds like fun."
It's a
Actually,
lot
no,
of
this is
fun.
cool. So I'm using this tool called StreamYard, and then StreamYard is like I can't see the LinkedIn comments. I literally have to look at another screen. But now they just added this they just added this on StreamYard. So now I can see people's comments now, and I can even share it on the screen. So Shamlina said, "Oh, hi, this is Shamlina. Great session here." Okay, thank you, Shamlina, for joining. Okay, so you have 12 people. So do you I mean, do you have different specialty for your different 12 people? Do you do tax planning and stuff, or is it just all like in managing wealth? And then right now, like, how much money are you guys managing now?
So the 12 people are financial advisors, support team, engineers, marketing. Surprisingly, we don't have any salespeople. I really hate trying to do sales.
Oh,
I prefer doing marketing.
yeah,
But
yeah.
it's not that I don't like selling stuff to people, but I don't like the
Hmm.
sleazy salespeople where they tell you, "Hey, you have to do this, you have to do that. Come on, let's make a deal." For me, it's like, you know what? You see the content that we post out there. You know our customers. I don't
Hmm.
need to try to sell you something. And
Hmm.
as a matter of fact, our main product that we call it Agent Risk Wealth, it's by invitation only. So you need to be invited by 3 existing members to come to our platform.
Hmm.
Our other products are fee based. We are a
Hmm.
fee based advisor, and anybody could come and we can give him advice. But the main product, you have to be invited in our platform.
So that platform is like, it's is it like and like the Betterment type of platform, like Betterment Wealthfront, like you have all these investments, and then advisors will just go in there and then just manage the portfolio of their clients,
So it's like
or
that. It is like that, but instead of
okay.
advisors, we have only algorithms. Like all our
Oh.
decisions are
Oh,
algorithmically
got it, got it,
based.
got it, got it.
Yeah,
Okay,
yeah,
okay.
yeah.
So if I have money, I want to go to you, then I just sign up for this platform that you have. Then I have
Mhm.
all this investment choices there. That
Yes, of course.
Oh, okay, okay. So how do you base your algorithm on there? Like, is that similar to? I mean, I have used Betterment and Wealthfront. Is your algorithm similar to Betterment and Wealthfront? If so, if how are they similar and how are they different?
I think they are different. We made them to be different because we talk with people that have different needs. And I'll tell you an example. In our case, all our customers have control of their account. At any
Mhm.
point, you can lock us out of the account and you could give that money to another advisor. You can keep trading or investing on your own. And for me, this was very important because
Mhm.
as an entrepreneur, I want full control. I don't want a company
Mhm.
having custody of my assets. So we
Mhm.
have small details when it comes to ownership, who owns an account, who can trade the account. Also, the algorithms make sure that we'll never your account will be segregated. We won't have all your money in a pool of money with other customers. And if something goes wrong, good luck. Plus, the way we build portfolios depend on the goals that the entrepreneur has, which usually are different from somebody that works a 9 to 5 job. Like
Mhm.
entrepreneurs are more want more risk in their portfolios. They want to diversify from tech because most of entrepreneurs usually work in tech. So we try not to include additional risks by
Mhm.
adding tech in the portfolio. And we do a lot of tax optimizations. We can handpick what we're going to do for you because we have customers that we select to work with. So we don't try to have 10,000 customers. We want specific type of customers that we love working with.
Got it. Got it. So okay. So I know with Betterment and Wealthfront, they purchase index fund, Vanguard ETF and stuff like that. So do you guys purchase individual stocks or allow index funds, or what type of investments normally do you have?
We do ETFs exactly as well from the Betterment.
Mm-hmm.
The different thing is that a lot of customers, a lot of people have complex financial lives. Like
Mm-hmm.
some of them they have stocks in the portfolios, they have mutual funds, they have bonds. So instead of
Mm-hmm.
trying to tell them sell everything, pay your taxes, and come to us, we collect all the assets under one account, and it's their own account, and we do the same for 401ks, IRAs, and what have you. And then we
Mm-hmm.
try to integrate them in an ETF portfolio. So we'll
Mm-hmm.
never try to enforce like, hey, you know what? Throw away, sell away all your stocks and move to ETFs. There are some people that they love their stocks, that they love
Mm-hmm.
their mutual funds. We'll never try to impose our strategies on customers.
Mm-hmm. So what if okay, so now with the coronavirus, and so do you offer, can the clients just call in if they like, okay, they have any question? Okay, I don't know how much calls you got from people like, yeah, my portfolio went down 20%, whatever. So yeah, I mean, what has been your experience now, and how have you handling and reallocating your portfolio now because of the coronavirus? We're obviously in the recession, and I'm also curious to know what is your opinion regarding the coronavirus on the market.
These are my two favorite questions. I have to say that literally, these are my two favorite questions.
Uh-huh.
So we are very transparent with our customers, and we talk with them via email on a regular basis, much more than any other platform.
Mhm,
So what happened when the market went down is that we explain them what's happening, what the portfolio is probably going to behave, and
mhm,
I think it's like 75 to 80% of our customers have put more money into
mm,
their accounts. They felt that we know how to handle this and they
mhm,
trusted us with more assets, which by the way, it's a good strategy. When the market goes down, that's when you
mhm,
need to buy more stuff. On top of that, we created a new product for people that they just need our financial advice without paying our fees because our minimum account is $100,000 and you have to
mhm,
be also approved by our members to be part
mhm,
of
mhm,
agent risk. So we created a new product where for $500 flat fee, we'll review your portfolio, we'll help you optimize it, and we'll give you unlimited hours to make sure that you are okay and you're safe and you can manage your wealth.
mhm,
Uh, my opinion on the market is, and it's a very strange because whenever I talk with financial advisors, they all agree like this is something that no one expected this. Whoever tells you that this was expected because the market was super high, they're lying. If they
mhm.
were expecting it, they should have made a lot of money by now and they should have
Yeah.
retired and they should be working for a hedge fund. So
Yep.
trust me on that. I have a lot of friends being at hedge funds. No one
Mhm,
and figured out that this is going to happen. So my opinion is always the same. When the market goes down, it is a fantastic opportunity to collect your tax credits using tax loss harvesting, to invest more money in the stock market, because Christine, people like great wealth, millionaires, literally are made when the markets are volatile. When
mhm,
things are going up, you don't have an opportunity to buy something. But when the markets are going down, this
mhm,
is the time where you'll make a lot of returns.
mhm.
Statistically, and feel free to interrupt me at any time because I'm Greek and I will be babbling for hours if you just let me go. So historically, the markets when they recover very aggressively, and we've seen in the past like you might make a like 60-70% when the markets recover at the end. We already seen like 35% markets. They're already up 35% from the lowest point. So people should understand that the stock market is not an emotional game. It's pure mathematics. You just need to follow your plan, make sure that you do everything that you have to do, and play the long game.
So I want to be clear that I'm not an investment advisor. So John being here is not me telling you guys what to do about stuff. So this is just John's opinion. So please, before you make any decision, you have to go to a professional investment advisor. So they have to be licensed. I'm not licensed. I don't give any investments, advising or recommendation. Okay. So and also, yeah. So basically, yeah, I'm curious, like, what do you think, like, the housing bubble was the last recession in 2008. So of course, like, what is your opinion on now? Of course, this is just your opinion. The coronavirus, like, is it worse than the housing bubble? Because the housing bubble took about 18 months to recover, right? And then we pretty much go to recession every 10 years. So what do you think, John, about this coronavirus? Like, is it worse than the housing bubble, or
You see, I'm smiling. I'm smiling because this is my third favorite question. How is that possible? Like, it's
I'm asking
amazing.
you all kinds of good questions here.
Yes, amazing, amazing.
And then this
So,
isn't scripted, by the way.
of course, yeah, yeah, yeah.
Uh-huh.
The thing is that this market crash is totally different from the previous one. There were specific reasons where the crash in 2008 happened, and this one happened because a pandemic is all over the world. So it's different characteristics, and we're going to see different ways that the market will recover. The market will recover, but we'll see it's going to take some time, and it's going to be a little bit strange
Mhm,
the way it recovers.
mhm,
But when it comes specifically to real estate, I have a, I believe it's totally different from what happened in 2008. In 2008, everybody could get a loan. Like
mhm.
statistically, 75% of people that were getting a loan in 2007, in
Yeah,
2007 and 8, had less than 680 credit score. Like 75% had this credit
yes.
score or less.
Yeah, they're just
Current,
approving everybody.
yes, currently,
That's why. Uh-huh.
after the banks learned their lesson, currently 85% of the loans that are given they have 760 credit or above. So we see
Mhm,
that people that got their loans pretty much they have more money in savings, they have a better job, so it's a little bit better situation. The
mhm,
other thing is that in 2008, I still remember all magazines were saying you need to buy a new patio, you need to buy a bigger garage, you need
mhm,
to fix your garden. So people were
mhm.
putting money in their houses, and when
Yeah.
the markets start crashing, this doesn't really improve the value of the house because you have a new patio. All of a sudden, your house is not 30% up. Nobody cares. So they
Mhm,
added these immaterial additions that made not real difference to the value.
mhm.
Currently, everybody's very careful when they add new houses. You've seen it, I assume yourself. Like they study, they say, should I build an ADU? If I build an ADU, I will make so much money
Mhm,
when I start renting it out. So they are
mhm.
careful and they try to make sure that there is a financial reason behind all their
Yeah.
decisions.
So
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 yeah,
Okay, well, so what do you think then? So 2008, I think it took about 18 months to recover, right, from the recession. So what do you think about the coronavirus? I mean, with the shelter in place started like end of I think end of March. So we're like almost 2 months in. So what do you think of this? Like, I mean, I think I didn't really analyze it that closely. I think we probably got hit harder than from the housing bubble. Is that it? And then, like, how long do you think I mean, do you see forecast it to be for the coronavirus?
for the stock market or the real estate market
Um,
or in
the
general.
market, the investment market, because that's what you have, right? That's your specialty, right, in the
Yeah, yeah,
investment
yeah.
market.
Correct,
Hmm.
correct. The
Yeah.
thing is that I cannot make any predictions.
Hmm.
Obviously, I can make predictions, but they will be wrong.
Hmm.
That's why I try not to predict what is going to happen in the future. I
Hmm.
try to figure out what happened in the past and what are the chances of this happening again in the future.
Mhm.
Based on historical data, I know that usually the stock market recovers 3 to 4 months earlier than the economy recovers. And this had happened many times in the past. That
Mhm.
means that if the United States starts, everybody starts going back to work
Mhm.
in the next month, they already started going back to work, like most states, if not all of them, are open right now.
Mhm.
That means that the stock market will recover even faster, and we've seen that the market has already started
Well, yeah,
recovering.
this week actually there were a couple of days the market was good, but I think today it actually went negative again. So, but I try not to
Yeah.
look at that closely because like I don't want to get into the emotional ups and downs whatever. And then like I don't want to make a comment like John, you said like when the market is down, it's a good time to buy. Yeah, it is a good time to buy. I think for people who do have the cash flow, but then like you have to be careful. You still need your emergency fund. So
Yes.
I have a client who's like very he's all about I want to invest, 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 and then, like, when the market crashed, of course, his investment went down and he didn't have much money in his savings. So I'm working with him on that one. Like, you always need your, so he had some sort of mindset issue about having money in cash. Like, he really didn't want to have any much money in his cash. But I told him that's also a very important part of your overall finances. So
Of
I think, like,
course.
if you have your emergency fund rate and you have allowed extra cash, you have a stable job, a strong job, and then you're still in progress with your other financial goal, then yeah, I mean, if you have extra cash, you go ahead and then buy more money in the market. But that's not always the case for everybody. I know there are people who have high net worth, and they can probably invest more money, but there are people right now suffering too who lost their job. So also be careful, and then just don't always be one-sided just thinking about the market. Okay.
Of course,
And then yeah,
I agree
yeah.
100%. And
Excuse me.
advice usually is very personalized.
Mm-hmm.
And I always suggest to people that I meet online, especially during volatile periods, have at least a year plus, I would say 18 months in savings. Like, don't
Mm-hmm.
try to invest, don't try to do unless you already have money in savings, because you never know how long it will take to find a new job. But for people that they have planned and they haven't lost their job, it is a good time. It is a good time to buy.
Yeah, so I think it also depends on someone's risk tolerance. So for the savings, I mean, if your cost of living is pretty high, so I'm not a big fan of having too much money in my savings. So I think it depends on the risk tolerance of my clients. So it can range from like 3 months to 18 months, or like I think like because 18 months might be a little bit too long, but then I think like if we don't know how the recession is gonna be, so maybe 18 months is okay if you have allowed cash. But unfortunately, not a lot of people have allowed cash, so sometimes they might have to make do with even 1 month. If a client comes to me with just 1 month to start with, I'll be very happy to get them started on that. And I'm
Of
looking at the
course.
comment right now. So Melissa Cadell has a question. Hi, Christine and John. Education is critical when there is a market correction. Gives comfort and knowledge is power, particularly when dealing with high network clients. Yeah, I think like that's why we come online a lot, like on social media, to always to educate people. And then I'm very big on making sure my audience get educated on this, so that way they to bring them the comfort. And I always tell them, I did a post one time like, you don't lose any money till you sell, like like that's the time. Like, it's the same thing when the housing market crashed, right? You lost money when the real estate housing bubble crashed. So I mean, you don't lose it till you sell your house. So unfortunately, one of my biggest mistake was actually to short sell my house. So I wrote an article that was my biggest mistake, because I live in Silicon Valley. I mean, it more than, I mean, it recovered the house that I short sale, but nobody knows any better. And I was very young at the time. It was 2008. I mean, that was like over 10 years ago. And then all my neighbors were like walking out of their house. So of course I was also like, oh my God. Then I didn't want to just walk away. I wanted to do the right way. So I short sale it. But again, it still wasn't a good choice for me. Yeah. So okay, so I'm looking at the, yeah, guys, if you have any questions for John or me, feel free to post in the comment. I am reading the comment all throughout. So let's see. So why don't we talk about so John is also on Instagram. So I think as if you guys are, oh, actually someone has a question. Actually, I can't see it here for some reason. Okay, so hi Tom said you can search. I'm not sure what he's asking. You can search for a time machine to cross it in the past to live a moment in the previous time. It is return and longing to realize what life you miss or change what you must have. Change it and nothing can be changed because there is no God. Okay, I don't know what you're trying to say, hey Tam, but then like if we, yeah, we can't change back time, and there's always we can only look at the lessons we've learned from the past, and then yeah, I have learned my lesson, and then like that was the only biggest financial mistake I made. But for the most part, like I became financial coach because like I feel pretty good, confident about my money. I feel it's just my gift to actually teach people, and I focus on my client building a relationship with money for my clients, because most of them like they range from people who are negative cash flow, don't have much money, to people who have a lot of money, and then and easily can invest $100,000. So they kind of range all over the place. So, but then the most important thing is that most of them, they don't know where their money goes, regardless how much money they
Yeah.
make. And then that's why I posted yesterday. You can be poor at 150K, but be rich making 40K a year. So it really depends on how you manage your finances. So okay, let's talk about Instagram. So why don't you? I mean, I literally, for those who know me, like I just I feel comfortable with LinkedIn now, so now I'm focusing on Instagram and growing on Instagram. So now I think I'm approaching 700 followers. Finally, like it was like it took me forever. I was stuck at the 500 followers, and because like I didn't understand Instagram, but I told myself now that I feel pretty good about LinkedIn, I want to grow also on the second platform. Be also at least I want to be very good at two platforms. So you have like 15,000 followers, right, on Instagram. So how long did that take you? And then do you use it for business? Like how did you grow?
No, I don't use it for business at all. It's mostly
Oh,
me
personal.
talking.
Oh,
Yeah, yeah,
okay.
it's 100%,
Yeah, yeah.
100% personal.
Uh-huh.
I have the brand. My branding on Instagram is different from my branding on Twitter, Facebook, and LinkedIn.
Oh, okay.
My LinkedIn is only professional stuff. My Instagram is mostly about people that care about my entrepreneurship journey, and I have a big following
Mm-hmm.
from a lot of stuff that I've did in the past. On
Mm-hmm.
Twitter, it's mostly technical and geeky, and Facebook, it's mostly politics. So I try to diversify. Yeah, to
Diversify
diversify.
different see many different kinds of John. So on
Yes, yes.
LinkedIn, I mean, have you gotten clients from LinkedIn, like for your managing portfolio and stuff?
We usually get customers from recommendations. So
Mm-hmm.
we need to have somebody recommend us a customer, and then we have an interview with him or
Mm-hmm.
her, and we make sure that they are aligned with what we offer. We like how they approach finance, and then we might continue. But we got a lot of customers for our new plan, the $500 flat fee. We got a lot of customers,
Oh, okay.
mostly because we started doing every Thursday webinars and videos on YouTube, and
Mm-hmm.
we try to teach financial by being also a little bit silly. So I
Mm-hmm.
hate things, I hate when people try to talk in jargon and very technical terms. I like to be a little bit silly. I like to have fun, else I cannot function. That's where I am. So we try to do everything in a lighter mood, and surprisingly, it works. We see conversions from LinkedIn with that method.
Got it, got it. Okay. So lastly, before we end this, I always ask all my guests, like, what is your story around money? What got you to where you are right now? How were you raised around money? So do share your personal experience around money. Hello? Oh, I can't hear you right now. I cannot hear John right now. Okay, so well, John figured out his audio. Okay, I think he left here. So anyway, I'm I'm gonna stay here till John comes back online. Okay, John, are you there? Okay, I think he's probably having some issues. So, guys, if you have any comments or stuff, just let me know and put in the comment. And then if you have any more questions, otherwise, yeah, I hope this was helpful for you. I try what I do. I try to have different guests come on. Oh, hello. Can you hear? Okay, I was about to end because I wasn't sure where you were. So, why don't you share your story around money, like what got you to where you are right now? And then, I always ask that to all my guests. So, why don't you share that?
Yeah. So when my last company got acquired, I made some money, and I tried to figure out how to manage them. So I went to financial advisors, and I didn't like the way they were getting kickbacks. I didn't like the way they managed the money, and most important for me, they were not using the same portfolios for them. It's like going to buy a Tesla car, and Elon Musk is driving another car. For me, it's like, no, if you are managing my money that I made, through all these years, you need to have the same portfolio. So I decided to team up with my team from my previous company
Mm.
and get into algorithms, get regulated, and start managing people with mathematics. And
Oh,
that's how I got into this space.
got it. Awesome, awesome. Okay, thank you so much, John, for being on my show. So I was trying to tell everyone. So I usually gee, I have someone comment. Okay, I'm not sure. Okay, so yeah, I was trying to tell everyone. So I usually have different kinds of guests come on because then we want to try to see different perspective from different people. So if you have any suggestion of a guest or any particular questions or topics you want me to talk about on LinkedIn Live, please let me know. Leave a comment or just message me or something. So I'd really appreciate that. So Joe, why don't you tell people how to find you and yeah. So I know you're on LinkedIn, Instagram, Facebook. You're saying so. So like yeah, what what do you offer, and then like are you open to people coming to you? Like what kind of questions can you help answer people when they connect to you?
Of course. First of all, if you're an entrepreneur, regardless of financial advice, feel free to reach out to me on LinkedIn or just come to our website, agentrisk.com, and send an email to the team and they reach out to me. I try to help all entrepreneurs without any charge, of course, because entrepreneurs need to help each other. Try to give my insights when it comes to fundraising, how to start a company, hiring, finding your CTO, all stuff like that. And if you need any financial help, again, send me an email. Even if you don't have any money, we'll try to figure out something and help you out. Yeah. The idea is that if somebody got lucky, I believe I got lucky, needs to pass it forward. So, yeah.
Yeah. Okay, John, thank you so much. And then I really appreciate everyone who joined the call. So yeah, if you have any suggestion or topics you want us to talk about or what guests you want me to bring on, please let me know in the comments or just message me. So thank you so much, guys. Have a good night or morning wherever you are. Okay. Bye bye.
Hi, guys. Thank you, Christine. Bye bye.